Hello everybody, welcome back. In today's video, we will discuss S&P 500 and the great risk reward opportunities that may be setting up for the next 2 weeks. Don't forget, we have the most important data coming out in second week of July and the Fed meetings right after that. So yes, I'm talking about the inflation because if that shows signs of peak, then we may get into a bull run like I showed you in my previous video where I compared the current market to 1974. So always remember this, markets can switch just like this in a blink of an eye, okay? So we have to be ready and wait for the signs of change in the trend. In addition, I also want to show you a couple indicators today that could confirm either rallies or dump, because sometimes, the key indicators that I watch, they are actually going down, but the market's going up. So that just tells me that we are getting a fake rally. And Wall Street typically does that. They try to they try to trap people, and especially retail like you and me. So we have to be very careful about those. So this is going to be an interesting video. See you soon. All right, so we filled one of the gaps that we left behind, but we still have two more gaps that need to be filled. One is right around 4,000 and the other one is right around 3,600. So definitely there's a bullish case and bearish case that could be made. So let's look at the futures market to understand where we could be headed next. So definitely to me it looks more bullish because we came down basically and then we rallied off of the trend line, okay? And now we're pulling back a little bit. But the interesting thing that we saw in the real market is an indecision which was decided today. So we had an indecision candle, basically a long leg doji, open and close right there. So there was no decision on the Thursday's market, but on the Friday, today's session, we basically saw a nice bullish hammer. So that basically decides that the market is trying to go up. So let's go back to the futures again to understand where the market is pointing next. So basically we came down, now we rallied, now we had a pullback. Now where could be going next? To the 50 EMA, right? We could go up, right? And that's where the gap is, 4,000, okay? So we may extend a little bit up, get a nice wick, and get rejected. And then if we close below one of these peaks, and then we try to rally again and be rejected at the trend line, and we just could be headed next and basically create a nice kind of head and shoulder, but basically a max pain situation and a double top, and then we could just totally be going down to 3,500, which is what a lot of people, the big bond traders and everybody's looking at 3,500. And that's what I already told you in my previous video. That's a really, really key level, and I'll tell you again why. So 50 daily EMA is really big. As you can see here, got rejection. We tried to go up, but basically came back down, rejection. So it's really a key level. That's why I think a lot of people are going to short this level if we get a rally up. So let's go over to the 2-hour time frame to understand, could we not even go to like 4,000? Basically the gap could be filled later on, and that's really possible. I mean, it doesn't have to be filled in the next week. It could fill 3 weeks later. But one thing is for sure, it's going to get filled, right? If not next week, then probably in 3 to 4 weeks, or maybe once we bottom and then we fill all the gaps when we go up. So if you're looking for a bearish scenario, basically what could happen is, which is likely, right? Anything can happen in the market. So we basically just broke this consolidation that we had. Okay, we were just coiling and we broke basically at the end of the hour today. So we could go up and get rejected at the 200 EMA in a 2-hour time frame, and then we could pull back and then we could go up, or we basically just cause max pain. Basically everybody's looking at this level, and so we go up, get rejected, be back here, and then do something like this, and then just fall back to this level, basically 3,600. And then we'll talk about that in the next video, or in the next week if that setup plays out. But if it comes down and repressure this key level, I think we may see 3,500. So, all right, let's go back to the real market and see why 3,500 is the key level. And if you guys are following my channel, you know I'm talking about 3,500. So we're gonna go back to the pandemic and basically the bottom of the pandemic, and we're gonna take a fib from the bottom to the top. And where is the 50 fib? Right, sitting right at 3,500. And also, actually, I'm going to get rid of the fib and I'm going to show you this EMA. So this is basically exponential moving average. So if you look at SMA, simple moving average, it's sitting right here, 3,500. I can actually show you, but trust me, it's sitting right at 3,500. So why would that be a point where the markets would like to sit around 11th of July? 11th of July is when the CPI data is going to be coming out and the Fed is going to speak right after that. So markets always like to sit at the key level. Always they want to sit at the key level before a big news so that they can decide either go up or go down. All right, so let's move over to the indicators that I think you should always look at. And I'm going to talk about US 10-year. All right, let's get into that. So US 10-year is such a key indicator. People ask Warren Buffett, what's one indicator that you look at when you're interested in purchasing stocks? And he said he looks at 10-year. So 10-year is so key to the market right now. What I'm looking for is basically to break below this 2.715. So if the 10-year, basically, it's right now in a downtrend, okay? It's just crashing. It's sick, right? It's showing that the economy is sick. But it's really good for the market. So the 10-year is probably going to do something like this. And then if it falls, and if it does this and falls, this is really bullish sign for the market. And here's why. So let's plot S&P 500 on top of the US 10-year. All right, this is how I confirm if Wall Street is not trapping me or the retail guys. Because if the 2-year is going up, and if the 10-year is going up and the market's going up, that means a big fall is going to happen. And let me explain you how. All right. So here's what happened. So orange, this color is basically the S&P 500. And so look what was happening here. The 10-year was going up, okay? And the market was actually getting ready to fall because market was doing consolidation. But when the 10-year peaked or 10-year was actually breaking out, the market just immediately fell from that. I mean, look at that, how bad it fell, okay? And when the 10-year started going down from here, see the market rallied. Okay, let's look here. The 10-year is basically since March, it was just going up. And here's where I was worried because see, in March, it was going up. And this was the problem. The market was also going up. And that's why a lot of the big people, a lot of the experienced traders knew that. And they were just ready to short this. I mean, because this is really big. That's why it's very important to understand some of the key indicators. And there are a couple of other things that I will tell you in the coming videos. So definitely subscribe if you're interested in knowing more about the markets and how to navigate, because this is not easy market for anybody. All right, even for the experienced people. So if you're new to the market or if you're experienced or whatever, consider subscribing. We definitely cover a lot of the things, and sometimes I'm also going to bring up statistics. I'm not bringing up today because a lot of the statistics are not playing out. People are talking about the seasonality, but nothing's working out, so that's why I'm not bringing to the channel yet. But definitely, if I find something interesting, I'm going to bring to the channel. So 10-year is definitely, you have to keep watching that, and I'll definitely keep you updated if I see some false signals in the market. But yeah, so 10-year is basically coming to a level where I think it's going to be really pivotal. So if it comes back to this point and starts to rally up again, then I'm going to tell you that be careful. We could actually go up to this level in the stock market, fill the gap, and get rejected, create a double top, and get rejected back to 3,500. Okay? But if it 10-year falls, then we may see a continued rally, and that's going to be very interesting. But I think this is all going to be playing around 11th of July when the CPI data and the Fed meeting comes out. So definitely subscribe, and we're going to talk about something else now. All right, so I want to show you one of the sectors that's really beaten down, and everybody's kind of hating that, but it's really my favorite sector, and I'm talking about these semiconductors. So semiconductors definitely on a downtrend, all right? So I know a lot of people are interested in NVIDIA, AMD, Qualcomm, TSMC, and all these kind of stocks. And I mean, they're amazing stocks, all right? But it's just like sometimes, a lot of these banks are coming out and saying, the semiconductors have had their run. But always remember, when everybody goes bearish, when things start turning around, okay? I mean, definitely it's right now looking bearish, but we're at a trend line on a weekly. And so it's at a 200 EMA, and we could actually go down to 180, which is simple moving average 200, and also a 61.8 fib, where typically big people like to come in and buy the stocks, all right? Also, I think this is really important level because around this 195 to 180, because I mean, look at it, it marked the COVID bottom. If you paid attention, this marked the COVID bottom and you just had a nice return. Look at this back in 2018. Perfect, right? Let's go back further. Look at here, 200, 200 again, all right? So I don't have to tell you that that's a key level. You can see now that it's really important, and the way things could play out, we could have a nice return on semiconductor stocks. So let's look at NVIDIA for a little bit because it's also showing really nice levels where people are going to jump in. I mean, look at it. We are at a weekly 200 EMA, and how many times? Look at here, COVID, mark the bottom. Look at here, 2019, mark the bottom. 2018, high interest rate environment, mark the bottom. All right, first interest rate hike, all right, mark the bottom around here. So NVIDIA is really showing, the key levels that if it rallies, then it has to rally right here. If it falls, then yeah, it's falling. But a lot of people are going to try to look and buy into this area. So just keep an attention, keep an eye on that. I also want to quickly cover Bitcoin. A lot of people are into this, and actually, I don't. If you watch my previous videos, I was pretty bearish even at 3600. I knew it's just gonna go because see, Bitcoin is basically sentiment based. Okay, everybody's feeling bullish, it just rallies. But it used to trade comparatively. It relates very very good to Nasdaq, but so far I think Bitcoin is just getting dumped and crashed. So be very careful. It's not looking bullish at all. I think we may be going to 12,000 very soon, and the capitulation can happen very quickly like we saw here. I mean, look at 26 to 1,000 to 20,000 just a week. Okay, so why do you not think that 20 to 12 can happen? Things can happen anytime. So just be careful, guys. If you are in Bitcoin, these are very risky assets. So be very careful. In the next couple videos, I'm gonna bring some more indicators. So we'll see. Let me know, guys, in the comment section. What do you think about the market today? Are you bullish or bearish? I know a lot of people are fearful, but I'm gonna start bringing more stuff in, like option market and things that are really important as well. So, all right, guys. Thanks, guys. I'll see you guys in the next one.